Hi, you guys. I'm Hannah Riley,
And I'm Wesley Barkus.
and throughout our research and our evaluations, we found that our recommendation is to short Snap, and you can see why it'll be a good financial decision. Snap refers to themselves as a camera company and has one of the most popular social networking apps called Snapchat in the developed regions such as North America and Europe. The firm has approximately 158 million daily users, and Snap generates nearly all of its revenue from advertising, with 88% coming from the U.S. The firm is headquartered in Venice, California.
Snap Inc. has several business niches. They were the first company to create communication through pictures, essentially changing the way that we used our cameras. Snap is also coming out with a new concept of shows specifically for their Snapchat users. They also do not sell any of the user information, unlike Facebook and Twitter. Snap will also partner with large companies and create geo filters, which acts as an advertisement, and this is different than other social media companies because it allows you to interact with the advertisement. Snap also created a Shazam integration on their app, allowing you to find out any song that's playing in someone else's Snapchat story. They created a store that sells unique items related to their brand, and just like the pictures, they're only there for a limited amount of time. Also, they're the third most popular app among millennials. When it comes to Snap's diversification, as we previously stated, 88% of their revenue comes through US, so internationally they're not very well diversified. Snap is also banned in China, North Korea, and Iran. 60% of all smartphone users have Snapchat. However, their daily average users for 2 quarters in a row has dropped from 188 million to 186 million. As you can see from our chart, North America makes up more than half of Snap Inc.'s revenue, followed by Europe and then the rest of the world. Also, in the quarters of 2018 to 2019, you can see a sharp decline in the quarterly average revenue per user.
Snap is a company with virtually no productive assets. The tangible portion of the left side of its balance sheet is composed mainly of cash and marketable securities, which are entirely composed of U.S. government securities. Politically speaking, Snap is not affected by elections of any sort, for you will never hear it brought up in debates or any election news. Also, Snapchat Inc. is specifically a social media company that gained their popularity when they first opened in 2017. The strengths of the company is that Snap has a market cap of $14.254 billion, which comes to mind for investors seeking a strong and reliable stock investment. Market participants who are cautious of risk tend to search for more large firms, and they are attracted by the prospect of varied revenue sources and strong returns on capital. Overall, Snap has relatively good total asset growth, but their cash flows are a different story. By taking a look at Snap's financial statements, you can see how unstable they are financially. The company has shown an inability to post a profit and requires continuous financing to remain operational. Rather than raise debt, management opts instead to dilute to existing shares. And additionally, if you take a look at their EPS trends, all their trends are decreasing.
As you can see from the financial ratios, they have a negative operating cash flow. Their free cash flow is decreasing while their debt is increasing. From this, we analyze the financial health of the company is in question. When it comes to Snap's stockholders, public investors have no recourse because co-founders control 96% of the voting rights. More specifically speaking, Snap is a dual-class shared structure, which means public shareholders have no say since the two co-founders control 96% of the voting rights. Typically, in a normal company, the CEO that oversaw a 50% decline in the stock price would be fired. But in this case, since the CEO was the founder of the company, there was no recourse for him. Also, Snap Inc. did a terrible job of setting goals for their employees, so the employees had no idea what they were striving for.
After performing valuation on the stock Snap, we found that they had an intrinsic value approaching 0, as well as a fair value of negative 10.27. Overall speaking, we were able to get these results off of a model from Demodderon's website. Additionally, because of their intrinsic value approaching zero as well as their negative fair value, we realized how unstable of a company they are financially. Additionally, when looking on reputable websites such as Seeking Alpha, Guru Focus, and Simply Wall Street, they all agreed that the intrinsic value is approaching zero, which essentially led us to the results that it would be an excellent short play. When comparing Snapchat to the S&P 500, you'll find that there's no correlation whatsoever. The S&P 500 has done, relatively speaking, well within the past month, whereas Snapchat has been extremely volatile and has declined significantly.
When comparing Snap Inc. to its peers in the same industry, you can see that Snapchat had a relatively slow and gradual growth, while the other competitors in its industry grew more rapidly and have surpassed it. When Instagram came out with their stories, they exponentially grew over Snapchat and its users.
Overall, the reason we chose Snap and to evaluate Snap is because we felt we had a personal connection with it, being in the sense that we've used it on a daily basis, and we've watched it kind of decline in users, including ourselves.
Not to mention, we also grew up when it came out. We've seen its entire life, its IPO, and everything that's happened. So after performing the technical and fundamental analysis, we think that shorting Snap would be the best possible outcome for any investor.
Thank you for watching.